Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thank you for coming on.
Good afternoon, Devin.
Well, let's start with some remarks by U.S. Treasury Secretary Janet Yellen, who said at a seminar this week that she thinks interest rates may have to rise somewhat to keep the economy from overheating with all this stimulus. But she later walked back those comments, saying she's not predicting an inflation problem. Tell us what you think about this and what you think the prospects are for rising rates.
Ms. Yellen suggested earlier Tuesday that the central bank has to raise rates to keep the economy from overheating if Biden administration's roughly $4 trillion spending plans are enacted. But as you said, Devin, she walked back her comments earlier in the day by saying that she's neither predicting nor recommending that Fed increases interest rate as a result of President Biden's spending plans. But Ms. Yellen's interest rate comments illustrates the market's greatest worry because U.S. economy is recovering from the pandemic shock quickly from the beginning of this year with 2.6% inflation rate and more than 6% economic growth on annual basis. So even though U.S. Fed does not respond the comments from Ms. Yellen, it is true that the possibility of raising interest rate by U.S. Fed is intensified.
So if there is a growing risk of rates rising, it would seem that would apply to the Bank of Korea too, which would be put in a similar position. For last month, consumer prices in Korea rose by more than 2%. What do you make of that situation? Is it something we should worry about?
That is a really crucial and great question, Devin. I think Bank of Korea is not likely to raise interest rate preemptively before U.S. Fed does. If we take a look at Korean economy situation, the pressure on raising interest rate is intensifying. For example, April's inflation rate increased up to 2.3% on annual basis, and market interest rate represented by a 3-year government bond rate increased by 0.3% compared to the end of last year. But it won't be easy for Bank of Korea to interest rate because economic recovery is about to begin as of now, and household huge debt will be very dangerous if interest rate is increased.
Well, turning to the markets, Professor, stocks this week on Wall Street have been mixed. On Wednesday, more companies posted strong earnings, and signs of an economic recovery lifted the Dow to a new high. A decline on the Nasdaq, though. What's the story in the global markets?
U.S. market is mixed between Dow Jones and Nasdaq yesterday. Dow Jones Industrial increased by 0.3%, along with a robust U.S. economic recovery and major corporations' great performance. But Ms. Yellen's comments on increasing interest rate cooled down high-tech stocks in Nasdaq. Finally, Nasdaq had, in aggregate, had a negative 0.4% return yesterday. European markets in London, Paris, and Frankfurt all gained over 1 to 2% yesterday, with improved business profits in Europe.
And here in Korea today, stocks started out lower but posted a decent gain for the day, seeming to reflect those gains in the U.S. When the Korean markets were closed yesterday for Children's Day. Tell us about the local markets.
Domestic market had a decent returns today. Until Monday of this week, domestic market had negative returns over 5 straight trading days in both of Kospi and Kosdaq. But today, domestic market shook up previous negative returns with 1% return in Kospi and 0.3% return in Kosdaq. It was impressive because this positive return was achieved under a higher possibility in raising interest rate. The rise in both markets were led by institutional investors in Kospi and individual investors in Kosdaq.
And finally, Professor, household borrowing in Korea has been increasing again in recent months. There are concerns about the burden households could face if interest rates rise. Tell us about the household debt situation.
Even though government has been restraining household loan, which amounts to about 2,000 trillion won, household increase is gaining speed again. According to government, major commercial banks' household loan increased by 1.4% on monthly basis, which is the highest level since November last year. Particularly, credit loan increased more than that of the mortgage loan at 5.1% on monthly basis. This rise of the credit loan is related to finance for stocks in companies' public offering like SKIT and speculative demand for a loan before implementing new loan regulations like DSR. Since the huge household loan could be one of the largest risk factors of Korean economy, government should be closely watching the changes of it.
All right, Professor, we'll be watching those changes to be sure. Thanks so much for sharing your insights today with us. We always appreciate it.
Thank you very much.